All right, folks, I get this topic all the time. Term life insurance. Should I have term life insurance over permanent life insurance? What's the difference? What's best for me? I'm going to break it down as simple as possible. Term life insurance is a great product to have inside your portfolio. There's going to be pros, there's going to be cons. But understanding if you use it correctly for what needs to be done, it could benefit you to a vast variety of things. So, two things I want to clear up super quickly. Understand that yes, it is true, 98% of term life insurances do not pay out. 98%. Two reasons why. Number one, because most people outlive the policy. I had my first policy for term insurance when I was 25, meaning if I have a 30-year term insurance, by the time I'm 55, that policy is going to expire. So 98% of the time, people actually outlive them or the policies just lapse. They stop paying them. But remember, it can be used for great things as well. If you're buying a house, you have a 30-year mortgage, you could get a 30-year term because that's just like mortgage insurance. But mortgage insurance goes towards the bank, term insurance can go towards your family. So it's great to have term insurance as part of your portfolio. But if you do have term insurance, understand you need to have the new version of term insurance, which is term with living benefits and all the living benefits, not just terminal for a living benefit, meaning if the doctor says you have 8 months to live, 12 months to live, you get that terminal insurance up front. No. With the new kind of term life insurance, you have critical benefits, you have chronic benefits. Critical benefits is if you have your heart attack, breast cancer, strokes, prostate cancer, anything that critically could happen to you. When you hear a critical benefit is pretty much if you could die. Heart attacks, strokes, all these kind of things, cancers, you could die. Depending on the severity, you could get a certain amount of your term life insurance beforehand while you're living. That's why it's called life insurance, not death insurance. Now, chronic benefits is anything that could be chronically. Long term, you need nursing care, you need nursing assistance. If you can't do 2 of your 6 everyday functions, like you need help to eat, to shower, to bathe, to travel, to move places, if you can't do 2 of your 6 everyday needs, then you could access the chronic benefit of your term life insurance. So those are 2 things that you want to make sure you do have with your term insurance as well if you go that route. Understand it's going to be the most affordable, but also understand there's something called ART. A-R-T, ART. That stands for annual renewable term. Meaning once you fulfill that time, if you get a 20-year, 25-year, 30-year, whatever you get, after that happens, you could have it annually renew. But always remember, if that's the case, it's going to go off your current age, your current health situation. So it's going to cost a little bit more. Meaning if you had it for $20 growing up, by the time it's done, it might turn to $80, $100, $150 a month for the same thing to keep the same coverage. So always remember that. It's not a bad strategy. It's not a bad idea. And you could always have multiple life insurances. You could have a term and a permanent life insurance together. So you could have all that in your portfolio. But the thing is, you want to remember, it's all about what's in place when you die. You could have great strategies, but if it's not in place when you pass away, when you actually need it to fulfill what it's supposed to do, what's the point? So you want to make sure that you have coverage. I have something I always say that term life insurance could get you to your retirement, but then permanent life insurance could get you through your retirement. So make sure you understand that and you look for that in your insurance. You're here with Earl, the Money Coach. If you have any questions, feel free to reach out. Take care.